account. So that is that on it. Now let's now prepare our trading profit and loss account, because we are going to prepare trading profit and loss account at that time. Now don't forget the headings. Olonto trading profit and loss account for the year ended 31st December 2011. Don't forget, you must write the heading at the top, because by the time you write that heading, it attracts mark as well. So you draw a ledger. Don't forget debit side and the credit side. Then after doing it, then let's start the question per se. Opening the first, looking at our format. You will see that the first thing you will first treat when you are preparing trading account is the opening stock. Opening stock. And what is our opening stock? Our opening stock is 6160. Then add purchases. So you put down one separate because before you add it. Our purchases is 15,610. And don't forget, in the question we have drawings. We have drawings and the like. But before we do that, we first add the carriage inward. Carriage inward is a transport that bring those goods down to your place. So you must add it to your account, to your purchases. So that is 16,364. Now you now let the goods drawings less, because you draw out from the goods that was purchased. So that is the reason why you have to draw, because you will not boost from your purchases. So it reduces your purchase at the end of the day, and it increase your drawings. That's why we add it from the cash drawing, which gives us 5,500. So 1,500, I told you it will appear twice. It's going to balance sheet, and it will also come into to trading profit and loss account. Do you have a return outward? We don't have return outward. So now let's go to the. So that gives us 14,864. So if you total it together, that is 21,024. That is the cost of good available for sales. So this is cost of good available for sales. If you are following the format, you see that that is how it's supposed to be. Then you let our closing stock. Remember, we have a closing stock in the balance sheet. It will appear here, and will also appear in the balance sheet, because it is an asset. It is an unsold asset at the end of the day. You want to know the cost of goods you have incurred at the end during the year. So, and before you know that, you have to let your closing stock. So that is 12,264. So that is the cost of good sold. So this is the cost of the goods that was sold. This is at the cost level. Then you now write your sales at the credit side. Remember our double entry principles. Anything that has to do with sales has to be credited. You see that we are following we are still applying a double entry principles here. So our sales is 34080. Let's see if you have a returning word. Do you have returning word? I don't think we have. We don't have returning word here. So we now, before you get your gross profit, because you want to know the profit you make in your trading, and you know the reason why we are preparing trading is to arrive to ascertain the gross profit at during the year before start deducting your expenses. So less this from this, and that will give you 21,816. So now let's add it together. That is 34080, and this is 34080. So that is that. And don't forget, sales is also turnover. So those things you have to be very careful to know the terms and that relates to those items, so that you could be able to do justice with it. So now let's go to expenses. Expenses that was incurred, because gross profit is not your real profit at the end of the day. It is when you deduct those expenses that you have incurred, that is then you arrive at your real profit, which is the net profit. Now you bring this gross profit forward. Gross profit, that is 21816. Now before we treat these expenses, let's first look at those ones that are supposed to be in the credit side of the profit and loss. The first one, we have income receivable, because it's an income, it is an added income, so you add it to your gross profit. And remember, the one you are given is 48, which is the income, because of the remember here that we have income in advance, so you less it from your, so you less it, so the income that you are receiving for that year is 28 naira. Then we have interest receivable, that is in arrears, so that one is 48 plus 10, that is 58. Remember, we treat it here likewise that it is an arrears. It is what this is the amount of interest that you are supposed to receive during the year. That's why you are given additional information in order to adjust for all this. So having done that, then let's now go to our expenses. Now let's begin to trace our expenses. Now here we have rate and rent. Rate and rent. Rate and rent doesn't have additional information. Then we have a salary. We have salary. Salary is 1612. We have a lighting and eating, and that is 164. Then we have travelers. Let's begin to do it. Travelers. We have so let's look at this. Travelers, that is 414. Then we have electric power. Electric power. It's also an expenses. That is 384. Now we have insurance. You know, insurance also have additional information of which we have done here. Look at it. We have insurance 208 and 40. So this 160 it is what it's going to your profit because it has been less from the advance. So the amount of insurance you pay during the year is 166. So that means 206 minus 40, that is 166. Then we have advertising. Advertising is 214. Then we have bad debt. Look at it. We have one bad debt before, which is 62. Then we have another bad debt in the information. Look at it, 1,000. It is given in the additional information. So add the two together, which is 1062. So that is that. Then we have general expenses. We have general expenses. Our general expenses is 604. Then we have postage. You can see that we are taking it one after the other. And when you are doing this kind of question, make sure you tick those information that you have been any information that has been treated. You start it. You start that information so as not to make mistake when you are preparing the other necessary account. So postage, we have postage. Let's look at it. We have 222. Then we have